Hello, my name is Chad Hart. I'm an extension economist at Iowa State University. And today I'd like to share with you an outlook looking at what's happening in the crop markets today and how USDA has updated those numbers as we've moved forward. Now, in this case, um, doing this on June 13th, so USDA has just released not only the WASDE reports, the World Ag Supply and Demand Estimates report, but also an update on planting progress and how crop conditions are looking as we're going forward here in mid-June. Now, as far as the supply and use tables, the idea is USDA did some minor tinkering with those, but did not make any major adjustments here in June. The biggest adjustments on the corn side were the small increase as we look at food, seed, and other uses. About 5 million bushels was added in both 21 and 22, and that's mainly because of some corn sweetener demand that we're seeing out there, especially as we look at glucose and dextrose coming from that market. On the other side, though, we did see USDA lower 2021 exports by 50 million bushels because of some, if you will, some lack of an increase, if you will, from the Ukrainian war. There was this expectation we might see more buying on the corn side to fill in more global feed demand, but we really haven't seen any sort of movement there, and so USDA backed off that number a bit. You combine the changes there though, and that meant that we saw ending stocks rise a little bit by 45 million bushels. Now, even though we saw ending stocks rise, USDA was able to raise their season average price as well. They bumped it up 5 cents based upon where prices have been sitting over the past couple of months. That has, led to a little bit of an increase in their season average price. So we're looking at 5.95 for the 2021 crop, and they kept the 2022 crop still at 6.75. So not a lot of changes there. And you can see no changes for 2022. So they didn't choose to re-estimate, if you will, or reproject what we're looking at in terms of production this year based upon the weather patterns we've seen so far over the month. Now, looking at the soybean market, we did see some minor adjustments there as well. And it was mainly, again, exports, but in this case, it was on the positive side. As USDA has been looking at our soybean export sales, not only for the 2021, but also the 2022 crop, they saw reason to move those up a bit. That led to looking at some very strong exports here as we finish out the 2021 marketing year. 2.17 billion bushels, looking for that to increase to 2.2 billion bushels as we look out to the 2022 crop. And so things got a little tighter here. USDA used that to raise the season average price here. They bumped the 2021 price up 10 cents to $13.35 a bushel. They bumped the 2022 price up 30 cents to $14.70 a bushel. So USDA is maintaining those strong prices. We are seeing export demand on the oilseed side, but not as much on the grain side as is once was hoped. Now, as far as the crop is, going out there right now, USDA is also in the, at the very tail end of re-surveying producers to see what actually got planted this season. And the market is definitely wanting to see that at the end of the month due to the planting delays we saw, especially through April and early May. Now, as we sit here today, planting has sort of caught back up the average. Corn is basically done. Beans is about 80 some percent done, and right, like I say, right along the 5-year average. So it's more a question of what crops shifts did we see as we've moved forward given those planting delays. Normally delays mean more beans, less corn, but we are waiting to see here given the large rush that we saw, especially in mid-May, did we see some more corn slide in as well? Now, in looking at the crop conditions, the crop has emerged enough where USDA over the last week or two has been looking to put a rating on the crop as it looks out in the field. And so far, despite the planting delays, the crop does look fairly good as it has emerged. So you can see here, this is looking at the percentage of the crop that's listed good to excellent in the crop progress reports that are released weekly. And we're up there in that 72, 73% range of good to excellent for the national corn crop, which is running not only slightly ahead of the 5-year average, but also slightly ahead of last year. Now, as you can see here, we're hitting this period of time where we get into what's titled here weeks 24, 25, 26. I want you to think of those as late May going into early, or late June going into early July. That's when we can see these conditions slide off, especially due to drought. That's what happened with the minimums there. You're talking about years like 1983, 1988, 2012 is where this is where we began to see that stress show up in the crop. You'll also notice that the red line for 2022 didn't start until week 22, and that's due to the delays in planting. Since we didn't have the crop emerging at its normal time, or if you will, at a normal pace, USDA delayed doing this rating by a week compared to other years. Same thing happened on the soybean side. In fact, you have to look here for the red dot for 2022. But what you can see here is, again, about 70% of the soybean crop nationwide is rated good to excellent. That is slightly above the 5-year average and actually fairly significantly above the rating that the 2021 crop had at this time. So, despite the planting delays, at least the crop that we see does look fairly good out in the field. Now, there are still weather concerns as we look out there, and probably the biggest one we're staring at here is the potential for drought to extend itself, especially here in Iowa. This was the latest seasonal drought outlook provided by NOAA, and as you can see, they do expect some drought development here in the state of Iowa, especially as we look out through the summertime. So this is in the case June 1 through August 31. And so there are some weather concerns there. The question is this going to be a early season drought? Does it extend itself early here as we look at June into early July, or is this more of a later season event as we look out there? So there are still weather risks that are helping support prices as we look out here through the summer months. Now, as I mentioned on the export side, we do continue to see very strong sales in the soybean market. This is looking at those advanced sales that we have, through the summertime here, and you can see that the 2022 export sales have been running well ahead of both what we saw in 2020 and 2021, and that gave USDA some evidence to continue to bump up that export number as we're looking forward. The world is still searching for vegetable oil, and given the problems that we've seen with palm oil production in Malaysia and Indonesia, along with the war in Ukraine, hampering sunflower oil production, soybean oil right now is sort of gaining some market share, and that's helping support the soybean complex. On the other hand, corn has just not found that sense of support out there when we're looking globally. We are looking at, I would say, above average advanced sales thus far, but they pale in comparison, especially what we saw last year. Now, as you can see in this graph, there's a big jump in that green line as we looked at 2021 that happened basically in May of last year. And that was China sort of stepping in and saying, they were going to need a lot of corn last year, and they bought a significant amount early on. Now, China has been buying here in 2022, but the amounts have been much smaller, and therefore we haven't seen that surge in export sales like we did last year. Now, looking at the meat side of the market, the idea is USDA basically made no changes for 2022. They held those fairly firm, but they did make some 2023, they made no changes. 2022, they did bump beef and pork production up a little bit, knocking down broilers and turkey. But overall, the idea was that we're seeing a little more meat right now in the marketplace for 2022, but we're likely going to see declines in overall meat production in 2023, with almost all of that decline, in fact, actually all of that decline resulting from the beef market, as we're looking at some, I'll call it stronger liquidation in the beef market today, putting a lot of beef available in the grocery stores today due to the drought that won't be available in 2023. So we're having some liquidation of the herd that's going to show up significantly in production as we look next year. But what this means for the crop market is that we are going to see probably less demand or less, feed usage as we're looking forward because we're going to have fewer animals as we look out to next year. Now, looking at the ethanol industry, given summer driving season is off and running, even with the higher prices, we are seeing corn grind for ethanol strengthen up again. The idea is that while fuel prices are high, we continue to see people driving a lot. And so this is market that has been bouncing around quite a bit, especially as we readjust here post COVID to what does travel look like again. But with production numbers now in that 105 to 110 billion bushels of corn to produce ethanol range on a per weekly basis, we are seeing some fairly strong numbers here for the ethanol industry. And so overall, demand for corn and soybeans is good. It's mainly being driven domestically by corn, for corn, but internationally for soybeans as we look out there. And so when you look at the prices, we're not at the highs for the corn market, those we experienced about a month and a half ago, but we're still at very strong levels as we look not only at old crop finishing out the 2021 crop year with prices remaining in that 725 to 775 range. But as we look at the 2022 crop, those prices remain very strong as well, for the most part, remaining above $7 until we look out deep into 2023. And even as we look at the 2023 crop looking into 24, we're still seeing prices above $6. So very strong pricing throughout again here. You can definitely see that the market is still concerned about the drought conditions that are out there out west and how they might extend into the Corn Belt. But there's also, the concerns globally of that if the war in Ukraine continues to linger on, we could see some additional demand come into the feed markets. Now, looking at the soybean prices, they have been rather strong over the past few weeks. In fact, we just reached new highs about 2, 3 days ago, early June, when we got into the 750, 775, 1775 range. Those have cooled back a bit, but we're still looking at prices old crop floating in that $16 to $17 range, new crop holding mostly around $15, and then even looking at the 2023 crop in that 1350 range. So again, very strong pricing across the board, offering producers opportunities to lock in some very good prices that, are strong enough that arguably are covering the higher input costs that we see out there. So it's sort of the same message that we've had over the past few months that, while costs are high, prices are still high enough to make 2022 look profitable as we're looking out for the future over the next 12 to 15 months, much like we saw profits in 2021. Now, the profits won't be quite as strong as 2021, but we're still looking at a profitable year going forward. With that, again, my name is Chad Hart. I want to thank you for tuning in to see this market update, and we'll provide you another one as we get into July and see how the crop is not only developing, but to see how those weather conditions are beginning to shape the crop as we head towards harvest. With that, I will stop and thank you again for your time and hope that you have a great summer.